and some of the opportunities that we believe exist. The next one, please. I'll just give you a few minutes on us and who we are, just so that you know a little bit about us. We're a European firm. We've got an office in Johannesburg as well. We're about 60 consultants. Most of us are 40 plus in age, so we've got a wealth of experience. We do a lot of work with banks. In Africa, our client list includes Investec, Ecobank, BGL, the Debt Management Office of Nigeria. There are really two practices within the firm. The one is financial services, and the assignments that we've undertaken here have been focused around internationalization and also investment appraisals. The other practice within the firm is an open innovation and economic development practice. All right, so the first thing I'd like to do is probably just set the scene before I launch into banking per se and the opportunities that we believe exist. This is a very interesting map. It's a map of the world, as you can see, and it represents the penetration of banking services in different regions. And what we see, there's a key at the bottom. The more developed countries have at least 8% of households with banking services, and it moves all the way down to many countries in the developing world where less than 20% of the population is banked. Now, I know that in South Africa, for example, it's meant to be about 40%, although I think the map shows it to be a little bit higher. If you have a look at accounts, in other words, the percentage of accounts, the ratio of bank accounts to population, in Nigeria it's around 40%, in South Africa it's over 100%. So in other words, there are more bank accounts than there are people. But the matrix that's being used here is the number of households that use banking services. And what I'd like to probably just focus on is economic development and the role of banks. And certainly, if you have a look at, if you consider Africa and the macroeconomic and the financial reforms that have taken place over the last decade, the shallowness of the banking sector is certainly worrying. And I think the other thing that becomes patently clear is that as far as banking services go anyway, and this extends into, I think, many other measurements, Africa as a continent certainly is the global laggard. And you've got to ask why. And I think it's a very important question to ask, because if we can understand what we did right and what we did wrong in the past, then surely we'll be able to learn from our mistakes and do things better in the future. So why? Why does Africa lag behind the rest of the world? It's a resource-rich continent. I think if you look at the most basic elements, in other words, water, air, land, we have all of them here. We also have a relatively young population. It's one of the factors that have fueled the growth in China and India and allowed them to grow at 8 to 9% per year. A young, enthusiastic workforce. So what's going wrong? What's going wrong in Africa? It's not race. It's not genetic disposition. I think it has to do with regulation. In other words, the rules that are set and the support that is given by government institutions and by regulators. And if you consider East and West Germany between the period of 1945 and 1989, you have a fantastic case study. Two economies that started on pretty much the same base, populations that came from exactly the same genetic pool, yet the one blossomed to become one of the world's superpowers, and the other one stagnated. In fact, it didn't even stagnate. It just kind of, down the slow, slippery road to nothingness. Tertius earlier mentioned the capital markets in Germany, West Germany, directly after the Second World War, and the role that they played, and I think that's spot on. Banking plays a very important role in stimulating growth. The other set of economies you can consider are North and South Korea. Just a very interesting fact. The North Koreans are, on average, 5 centimeters shorter than South Koreans. So what we've got there is over many years of laissez-faire economy versus this very suppressive communist economy. It's manifested itself through diet and through lifestyle into physical traits of a population. So I put it to you, if in Africa economic policy supported growth, and certainly if we could do away with the corruption, the nepotism, we all know it exists, we'd have a much better story. Alex Ferguson didn't build Manchester United into the team that is today by hiring his friends and family. Sorry, I think we missed the slide, haven't we? Yeah, there we go. I prepared this one myself, and really what I wanted to do is show the role of the bank in economic development in its most basic form. I wanted a layman, not that any of you are laymen or laywomen, to be able to understand what role banks play. So we've got surplus funds groups and debtors funds groups. The one have money, the other one need money. Banking institutions act as an intermediary. Without banking institutions and without the capital markets that Tertius referred to this morning, we simply don't grow the economy. So, the regulators need to be very careful when they regulate banking institutions. Now, I know a lot of people support Sanusi, and I believe that a lot of what he's done has been very good, but he certainly has spooked the banks. We've got a situation in Nigeria now where banks just don't lend. They lend to corporates. It's safe as houses lending, but they don't lend to SMEs, they don't lend to the agricultural sector, and Nigeria is really feeling it. The CEOs of banks are in a position where they're simply too scared. They're simply too scared of having their heads chopped off, so they don't lend. The Chinese have a fantastic proverb: never scare the donkey that carries the china. Never scare the donkey that carries the china. By china, I mean the stuff we eat all. So just going back to Korea, what this shows is the relative growth in GDP adjusted by purchasing power parity per capita in 3 different economies. So the two points I'm going to make is, firstly, there has been growth in Africa, and I'm going to refer to this in the coming slides. But we still lag behind South Korea. The other point I'm going to make is that Africa, although often viewed as one continent and one market, and I think Hugo had mentioned this earlier, it isn't. What we've got here is Botswana, a very stable economy with good macroeconomic policy, and it's enjoyed very, very healthy growth rates. And Kenya, which is a fairly big economy in African terms, but it's been plagued with political problems, and growth has been pretty stagnant. So Africa's comparative growth performance, and we're really comparing the world to Africa and to developing Asia. And we can see that Asia has enjoyed much higher growth rates. So just some positive, some good news. GNI per capita has grown from $655 to $948 from 2000 to 2005 in real terms. Real GDP growth has accelerated from 3.7% in 2000 to 5.7% in 2007, and it continues to grow. I think it peaked in 2007, but we're still seeing very healthy growth in Africa. Real per capita GDP growth has accelerated from 1.3% to 3.3%. And a point that I'd like to make, and I don't know if any of you have heard this before, but the deepening of the financial sector has a pro-poor effect. In other words, as the financial sector deepens, the poor are the first recipients of the deepening. GDP at current market prices for Africa has increased from almost 600 million to, sorry, that should be billion. GDP in Africa is at around $1 trillion today, and inflation has also slowed. Something, I guess another point that I'd just like to make, what I've pondered for some time now, and Dr. Al-Kiyalem spoke about this a little bit earlier, is Africa and how it stacks up against the BRIC economies. So this morning, I just did a little bit of research, and I had a look at growth rates, the populations, the GDPs, and the Gini coefficients of Africa versus the other BRICS. And it's hard to compare to China and India because their growth rates are much higher and their populations are much bigger. But we could certainly compare ourselves to Brazil, who has a population of 200 billion, but a much bigger GDP, 1.6 billion. What we could do is take South Africa, Nigeria, Egypt, Morocco, the four biggest economies, lump them together, and we get to a GDP of about $1 billion, almost. With a population of, let's see what it is, it's about 300 million. So we're not actually that far off Brazil or Russia. And the Russian growth rates have slowed. I'm pretty sure that in the years that come, in the ensuing years, Africa will enjoy higher growth rates as a collective entity than Russia will. So despite the first few slides, it's really not all doom and gloom. All right, just a little bit about the banking sector here. And the first point that I've put up is a very interesting stat again. In South Africa, 3 of the biggest banks have assets of more than $100 billion. And the Bank of England recently classified any bank that has assets of more than $100 billion as a bank that's too big to fail. I think going forward we're going to see a lot more of this, and that brings me on to the second point. So you have a number of regional players, and it's very encouraging to see because it means that regional integration is taking place. And we're of the opinion that for banks to really succeed in Africa, they've got to become regional players. It introduces greater economies of scale, which I think a lot of the banks lack here. And it also encourages, or it's the first step in greater interregional trade or intra-regional trade. Something else that we're seeing is the banking of the unbanked. So the first slide referred to the number of families or number of households that have banking services and put most of Africa at below 20%. The cell phone penetration is at above 30%. There are a lot of people with cell phones that haven't got bank accounts. And what's also very interesting is the high cost of banking, which I'm going to refer to in a coming slide. So, financial deepening. There are just 3 matrices here. Liquid liabilities over GDP, bank deposits over GDP, and private credit over GDP. And there has been some growth, which is encouraging. Now, getting onto the cost of banking. Net interest margins across different regions, and you can see that sub-Saharan Africa is just way more expensive than anywhere else. Now, the big problem here is that There are many countries in Africa. I think Malawi had the top rate. 98% of Malawians cannot afford banking. They can't afford banking services. It's as simple as that. So I'm just referring to my notes. All right, so on to the next slide. This one refers to checking account fees across the world, and there are a number of different countries. I think every country is listed across the bottom, and as you obviously tend towards the upper end, fees are incredibly low. But in sub-Saharan Africa, we've got the highest fees. So, this brings me on to business drivers, market gaps, and growth industries that exist in the banking industry. And the first point that I'd like to make is there's a lot that's inhibiting the growth of the financial industry. So, for instance, the absence of sound contractual information. The absence of credit information. There aren't effective credit registries. It's always encouraging to see more credit agencies, credit rating agencies springing up in Africa, because it'll enable banks to lend to SMEs. It's sorely needed. So I'm just going to run through these. So firstly, 15% ratio between bank accounts and people living in sub-Saharan Africa. Worldwide, just going back to mobile phone banking, there are about 4 billion mobile phones, but only 1.6 billion bank accounts. So you can immediately see the huge potential there. Consolidation in the banking sector in sub-Saharan Africa, we believe, will continue. So we'll see EcoBank, for instance, acquiring a lot more banks, the same with Standard Bank. And what will emerge is a number of regional superpowers with very large balance sheets and very low cost-to-income ratios. There's also been a resurgence of interest in smallholder agricultural development, which I think is great, but really we need to tend towards larger scale commercial farming, which can be easily financed, and where we'll enjoy greater economies of scale. Lastly, on this slide, there are obviously new oil and gas fields in Ghana, in DRC, in Uganda. I know off the coast of Kenya they're exploring as well. As I mentioned earlier, we've got a vibrant and relatively young population. And many people look at this as a negative, but certainly from a retail banking point of view, it means that there's a great market to service. But more important than that, it's going to be a driver of the economy, as it has been in China and India. Transport infrastructure, and I know somebody spoke about this earlier, about the state of the roads, the lack of railroad networks. It's something that has to be developed, and it's an inhibitor in the economy at the moment. But certainly it provides a lot of opportunity for banks, because it has been placed as a priority by many governments, and it needs to be addressed, and it needs to be financed. Asset-based finance. Now, I believe, as I did with the mortgage market, and I'm going to touch on this in more detail in a little while, the infrastructure isn't there to support these kind of products. And this goes back to the point that I made right at the beginning of my presentation. The government institutions need to support these kind of products. These products, mortgage loans, for instance, are going to be one of the drivers of economic development. The property market can't develop unless you can finance houses. But you can't finance houses unless you can easily register a bond over a house. The same applies to asset-based financing. It's very hard to have a lane over an asset in many African countries, which means that banks can't repossess assets when the loans aren't performing. Lastly, and this is probably the most obvious one on this slide, is project finance. So power generation, refineries, railroads, and then let's not forget the leisure sector. So what I'd also like to touch on is the capital markets and the role that they play relative to commercial banks. Now, what's very important is that, certainly for lending to SMEs, even mortgage loans, is that there's some way of mitigating the risk and spreading the risk. The most effective way of doing that is through securitization. So I think banks that can get securitization right will have a fantastic future. A repo market is also needed. There needs to be some way of banks funding their books without having to go to the central bank. A repo market will also create an effective yield curve. A yield curve will lead to a liquid bond market, which is needed. And that brings me on to corporate bonds. So I know in many African countries there are well-developed government bond markets. Sometimes the yield curves lack the liquidity that they need. But certainly as these markets develop, and as we see repo markets develop, the yield curves will develop too. And the corporate market will enable corporates, firstly, to raise money without having to go to their banks. And will enable banks to do so much more too. Fixed income derivatives. A major inhibitor at the moment is just credit risk. Banks have a certain exposure to a company, they're at their credit limit, they can't lend anymore. If there was a CDS market, it would help us a great deal. Convertible bonds, I believe, will also drive the corporate lending market, in the sense that having a bond that converts to equity becomes a lot more attractive to a lot of investors, actually. And then lastly, infrastructure finance, and I distinguish this from project finance because these are very often government projects, state-funded projects, that need external financing, but don't necessarily have net cash flows to support the lending in a project finance kind of way. So what I put under here is roads, hospitals, ports and airports. So just a few more. The new discoveries, as we know, here in Ghana, the DRC and Uganda. Not only is it a lot of oil, but it's good quality oil. It's oil with low sulfur content, it's light oil. There are pipelines being built all over Africa, and more are needed. And I refer here to the East African pipeline, which will run from, I think, Mombasa all the way into Uganda. There are projects like this that need to be financed. So it provides a lot of potential for African banks. And then refineries, and I just, again, quote a little stat here. More than 90% of petroleum products in Nigeria are imported, despite Nigeria producing, what is it, about 2 billion and 30 billion barrels of oil a day. All right, so I'm going to look at a few sectors. The first one is agriculture. So